Well, welcome back, everyone. Another incredible day in markets at the beginning of the week, each week in the active trader room over at becomebettertrader.com. We put out a idea of likely outcomes, flight paths for the primary market, the S&P 500, and draw off of that where many other asset classes, individual stocks may be able to go. Now, it's always nice to have a couple of options in terms of direction, but I like to pick which way we are moving. And when we look at the two flight paths, they diverge dramatically, of course, when we get into the CPI data point, which would be, of course, today. And we got the point coming out cooler. Now, we noted that as we move through this week, the flight path that we were following more closely was the B flight path, which then with a diverge. And we noticed yesterday that if the B flight path was maintained, and this was in yesterday's market, that there would be a higher probability that we can see the green dotted lines and that big move up in the market on the SPY, taking out the weekly pivot range top, more likely play out. But we're not expecting it to stick around for very long. And why is that? And how did we have an idea that we're likely to see a little advantage if we continue to maintain that B flight path more so than the A? Well, very simply, I'm going to take you over to a set of strategies and tools that I had a wonderful, and it was my honor to have that privilege to be able to talk to so many of you that may be listening in right now and watching this video earlier today during that educational session that I held. And thank you for such nice words and all that wonderful feedback. And I'm going to just say welcome to all the new Triple S student family members and welcome to all the new Wealth Charts Jumpstart family members. When you take a look at the daily, the 4-hour, and the 1-hour charts, using this multi-time frame approach, we know that the daily throws its signal out and captures about a week to two in the future, the 4-hour, 3 to 5 days, and the 1-hour, 3 to 6 hours. Looking at the end of the day, we noted that the Triple S subchart indicator showed the soldiers, the Triple S line, through the center of the channel. However, time and time again, we've seen this resolve to a pause or a wobble that then tends to consolidate and continue. Where we sit on the 4-hour chart, which can give us a little bit of a nudge, kind of like the tail wagging the dog, tail being the 4-hour, dog being the daily chart. The 4-hour chart has seen an extreme condition, one that does not last very long, a condition where a pullback to refuel is very likely, but are we likely to go a little higher and perhaps even a little higher than the highs that were made today? As you can see, the S&P E-minis got up to a high of 53.37 of a point. And the highs back over here were on the future chart, of course, for the newer contract, obviously, 53.33 of a point. So we're dealing with a market, very simply, slightly higher highs all time. And the tail may be wagging the dog. The 1-hour chart, however, says into the evening, we may actually see a little bit of improvement. Even after a minor pullback of another 10 points or so, another attempt to move up. Now, my expectation is that we, at minimum, pause and then potentially are able to continue the journey. I'm looking very much forward to sharing my insights with you on videos just like these as we move forward. Thank you for watching. Stay safe out there. A pause before a resumption up or a pullback before a resumption up. Well, I'm in, can't be there. Looking for that pullback before a resumption up. And of course, there's going to be a plethora of areas that may be interesting to look at as trend trades. Again, assumption that this market wants to keep trending. Have an incredible rest of your day, folks. Again, a big warm welcome to all the new student family members. Have a safe rest of your day, happy rest of your day, and we're going to see you tomorrow to do it all over again. Have a great day. Bye for now, and thanks for watching, folks.